All right, good morning, everyone. Let's get going here. All right, last night's session in the States, a little bit more eventful, I suppose. NASDAQ 5000. I'm wearing my NASDAQ 5000 cap on right now. If you guys can't see me, but I made a cap specially for it again. Broke it out of the closet from about 15 years ago. Yeah, I mean, obviously that got markets a little bit excited once we kind of got above 5,000 level. You can see we bumped our head there early, and then we managed to close above it at the end of the session. Obviously a really positive thing. We had all-time highs in in the S&P and the Dow obviously as well. But what I think is, to me, what was a little bit disappointing was the lack of follow-through overnight that we saw out of any of the Asian indexes and some of the risk metrics. So one of the main things being, obviously yesterday, PMI came out yesterday, beat expectations. Berkshire Hathaway was out, early yesterday, lower than analyst expectations. But yeah, there wasn't that much kind of going on in the market. I think the Nasdaq reaching 5,000 was the real exciting point of the day. So now that's done. Now we can start to look for something else in the market to give us some leadership. Right. This morning we had the Shanghai was actually off quite considerably, off about 2.5%. Some of the real estate developers and state construction companies were down quite a bit. We had the interest rate cut over the weekend, which really wasn't able to generate a whole lot of momentum out of any of the mining stocks globally or anything else for that matter. We did have the Nikkei, which pulled back a touch. But we got through 120 last night in the U.S. on the U.S. dollar yen. This morning, kind of coming back below that. I think that's maybe why we corrected a little bit there. And then we had the policy rate announcements in Australia overnight, and the central bank, I think markets were kind of expecting about a 60% chance of an interest rate cut again, and they held off on that for the time being. So obviously you saw a little bit of a correction in the Australian index there, as well as a bit of strengthening out of the Australian dollar. Right. And into the maps this morning we have Barclays Group Africa out with earnings. Headline earnings per share coming in at 15.38. Bloomberg consensus at 15.44. Revenue number also looking a touch light, only about $500 million. Divvy coming in dead in line. So I kind of think this is somewhat expected if you look at what Nedbank's subscriber growth numbers and also the market gains we've seen out of First Rand, that these guys were always going to kind of be struggling. And anyways, we'll have to see how the market takes it. All the earnings, earnings misses of late have been really benign in terms of the correction that we've seen. We've seen very, very little to no correction out of a lot of these stocks on the back of earnings misses. Simply because from my opinion, because markets are in such a bull market. No markets, we've constantly got money coming into the market. Hardly any money coming out, so you get people come in and rush and sell their things on poor earnings, and then there's no follow through because there's no one actually unloading the stock. So I wouldn't be surprised if there's not much of a negative reaction out of the share. All right, key factors out today. We have local business confidence. We had Japanese monetary base, which came in a little bit soft. We've got retail sales out of Germany at the open, expected at 3%, and then we've got UK construction PMI. All right, let's get into the maps. Okay, so if you ask me what the highlight of yesterday was, sorry, I'm looking at, this is the 2-year here, sorry. Actually didn't want to look at that. Well, we can look at this. You can see here, obviously we did have a nice move again in the 2-year, but here we go. I want to look at the US 10-year, which made a nice move back here, well above 2 again, 2% on the sorry, I'm just freaking knew that didn't look right. back above 2 again, so we were trading below 2 the last couple sessions. Starting to look bullish to me on this chart, if you ask me. We've kind of been in a bit of a little bit of a narrowing wedge here, a little consolidation, and I think we one more up day in terms of yields to take us to the next sort of level. So watch this very closely. To me, this is the best leading indicator in the market. What I was absolutely shocked to see yesterday was some of the commentary. You had Mohamed El-Erian came out and said the Fed's going to hike at the next interest rate meeting, and then you had Bill Gross, which obviously they're not the same company anymore, came out yesterday and said they're going to hike in June, which is freaking spectacular because those guys paid more attention to interest rate expectations and monetary policy than almost anyone, and you can see it in treasuries. Even when the data doesn't look that good, even when after Yellen comes out and speaks, we kind of get this, we get a rally in treasuries, and then all of a sudden we start to get a bit of a sell-off, and yields start to creep right back up again. There's quite a famous saying that the Fed doesn't make interest rate policy, the market makes or decides when you're going to hike interest rates, and you're kind of seeing that right now. The market just doesn't care what the Fed's saying. It doesn't care anything else. It just knows that rates need to start going higher. So it really feels to me like it wants to go higher. It really feels to me like we're going to trade up closer to 220 over the next, maybe over the course of the next 2-3 weeks. And I think we must, to me, it's still the most important thing to pay attention to at the moment. I find it very difficult to believe if we start to see interest rates creeping too much higher in the U.S. that we'll be able to see a sustained rally in global equities. So for the short term anyway. So keep that in mind. All right. Next one we'll look at is Standard Bank, which has sold off quite heavily the last couple sessions and it's creeping down here, down to the support level. I think it's about right at 150. Yeah, you can see there, which is really kind of where we broke out. We came down and touched this, I think, mid-February or early February, bounced off of it pretty nicely, coming back down. I think this morning, if we get down there, it'll be interesting to see how we trade around there. Interesting to see if the market will continue to, we'll be able to support it again here. All right. Next one we'll look at is Billy's, and I just want to show this yesterday, almost a key reversal. You can see we did take out new highs and pull back. I'll show you on the 30-minute. We'll shorten it up just a little bit. You can see here. So we did make a new high for this big push that we've seen up over the last couple months. And then we really reversed hard. I mean, we traded down to below 286 there right at the end of the day. We actually closed up a bit in the auction and then drifted up a touch from there in London. But I think that's important. That reversal day yesterday and doing it on the back of interest rate cut out of China, to me, was really significant. And I actually would say that I think we've seen the top in Billy's for even the next couple months. That would be my personal opinion. All right, let's look at Sasol this morning, which Sasol, there's, we kind of came down here and gap filled where we broke out from to the upside at 420, and we dropped that level yesterday. Obviously, we closed down at about 414. This thing to me is starting to look like we got to come down to at least test 400, if not all the way down to about 390. I fully expect us to test 400 today, just because this thing's been moving kind of 12 to 15 bucks at the minimum. I don't think that this little bump up this morning in oil is enough to kind of get us going. So watch this closely. I think that if you can see, especially if we drop below 410, I think we're going straight to 400 test down there. All right, MTN, I should have shown this a couple sessions ago. I actually looked at it, I just forgot to show it in the morning. So you can see there, we dropped, not yesterday, but the day before, we really dropped support here around, call it 208, 209, and kind of a broadening formation, bit of a bear flag that we've had going out of the bottom of this downtrend. So it looked like we had gotten out of the downtrend here, but I guess it just kind of wasn't to be, and then we've very quickly moved back to kind of get back into a downtrend. So I think this is important. I wouldn't be surprised if we come back down here and test 200 again. So watch it if it gets down to around that level. The last one I'm going to show is Anglo Gold, which is starting to look a little bit head and shoulder-ish here. we're going to have to see this thing, I think, reverse, and it'd have to trade quite a bit lower to complete that pattern. But it hasn't. It has traded better than the rest, but like I said, it has been outperforming. Gold's, lagging. If we start to trade lower, make a bit of a reversal below recent lows, I wouldn't be surprised to see us at least come down, test 120, and maybe even lower. That's it for today, guys. Good luck out there.